It was definitely an interesting weekend. Seeing the ES and the NQ effectively gap down another, I don't know, what was it, 5% at one point? Let's see. Yeah, 5.6% at one point. I mean, that's fairly incredible considering we were coming off two 5% days. I don't know, if that's just margin selling or it's hard to say exactly what it is. But it's going to be a headline driven market here, and part of the reason that I say that is because it could just be that China says, all right, we're going to come to the negotiating table on the tariffs, and then all of a sudden we're ripping in the opposite direction. So you kind of got to be prepared for anything. And at this point, if you weren't already short some stocks, I mean, chasing shorts here, I think it's the dumbest thing you can do. You should have, and that's not to say we can't go lower. The market can absolutely go lower, but like just chasing stuff here after the market's gone down, 20 something percent in basically a straight line, you can't do that, right? You should have already been short long ago. How did I short GRRR? Very simply, when it lost the 50-day moving average. It was very easy. So on 4/2/25, I noticed. Okay, so this is the first thing I noticed. I noticed this chart ripping higher on 3/31, right? So it would have been on this day right here, and it was bouncing off the 50, and I was like, "Ooh, that looks good," but I won't buy it today because they have earnings this after hours. So then earnings come out in after hours, and this is what it does. It pushes up to 32 and then completely fails, right? And then the next day, right, on earnings, it completely fails. And so that next day, this thing is resting right against the 50. And I know that when charts lose their 50, that's the start potentially of a sell cycle. So the very next day, this thing comes in and, it starts to drop. And I'm, just looking at my 5-minute chart. And as soon as this, now I kind of missed my better entry, which was like 24s, but I chased it a little down, when it took out its intraday lows. So basically this little level right here. And I've got a 23.46, and I've just held, right? It's below the 50, and it just failed on earnings, and it just lost the 50, and you get to move down, you get to move sideways. You get to move down, you get to move sideways. And then Trump shows all the tariffs, and then this thing's gapping up. Now, yes, the next morning sucked a little bit. You get the push up, near my average, but again, my stop is prior high day, effectively the high of day of when I shorted, and I'm using the 50-day as my guide. So we're still below the 50-day at this point, and then this thing just completely fails by day's end. So I'm totally in the driver's seat by the end of the day, and then this thing has just been fading and fading some more. So and on Friday, I did take profits on a bunch of my shorts, and of course, we gapped down further today. And there's nothing really I can do. I plan on taking a little bit more profits on my shorts and just letting, small, tiny pieces of them work. And if the market can rebound into declining moving averages and, particular groups, whether it's semi, cybersecurity, software stocks, gold stocks, oil names, I don't really care what it is. If they rally into declining moving averages, then I'll be looking for shorts to reload. And we'll go from there, right? I mean, I don't really care to be short, but the only really thing that I see that's holding up well is gold. And again, I'm not too totally excited about it. I mean, I was in AEM and got stopped out, but if this thing's going to hold the 50, I'm not going to argue with it, right? It's like the only chart that's not below its 200-day moving average. I mean, effectively the only chart. So if gold's going to hang up, then, the miners can hang out pretty well too. And if that's going to be the case, and that's where I want to be, I'm not going to argue. I'm just going to let price dictate, what looks best. And again, I am prepared for an oversold rally. So that's why I was talking about, possibly playing the TQQQ just for a tradable bounce, right? I'm not trying to say this is the low. I'm just thinking, maybe a 2-3 day move at the most. And then, you get paid and you move on with your life. Yeah. Well, I mean, I took my lessons in 2022 because in 2020 and 2021, I was just a long bias trader, right? So I was just trying to buy breakouts. I was trying to buy dips. I was, scalping. I was, doing everything on the intraday. I was a day trader. So when 2022 rolled around, the strategies that I had in 20 and 21 were no longer working. So, I had already started to swing trade at the ends of 21 and into 22, and I did catch the oil names in the beginning of the year. But I learned my lessons because a lot of what I was doing in the past wasn't working now, and then trying to be a breakout buyer, being a long bias only trader, it didn't work. So I had to learn some shorting, right? Which I learned from Nate from Investors Underground, and I learned from Gil Morales, who used to manage a book for Bill O'Neill. So I learned from them too, just watching them and kind of implementing the things that they were talking about, and reading the book from Gil Morales, and shorting with the O'Neill disciples, and just like figuring out that part of the market for myself, so that like even if there ever was a downturn, I'd be prepared for it. Learning how to play the other side. So that is kind of how I learned my lessons. But again, I've learned from a lot of people, long and short. I haven't came up with anything in trading. All I've done is just take the best parts of all of my favorite traders who have had decades of success, and then applied it to my own trading. Oh, thank you. I actually got both my little angels behind me. They're just laying down. Sometimes they'll be humping while I'm on stream, which is I find it real funny. You took some more ABGOs? Yeah, semis have been awesome. I've got in the 1.8. I think it's a 189 on AVGO. Yep, 189 on AVGO. A 98 on MU short. Now is a 988. So, GRRRs in the 23s, ESTCs 119, SMCI 55s, Rigetti basically in the 10s, just under 10s. So, yeah, I mean, the short side has been absolutely spectacular. But again, we've been paid, right? If you are diligent, you should be taking some off into this instead of, continuously hammering short. I think, just plowing into more and more and more shorts isn't the right idea. I think it's good to make sure you get paid, treat it like a business. Don't get FOMO just because things are going down and like now you're negative on stocks. It's like, for anybody following along, I got negative on stocks in February, and I was telling people you do not buy prior leaders here, right? They were screaming risk off, and I know people still wanted to own the Nvidias and the Palantirs of the world just because they thought it had gone down too much when it got down to 90. Well, if you liked it at 90, you probably love it at 70. But people get negative way too late, and you really need to be paying attention to price. All right, let me do a little bit more scanning here, guys. What do we got? We got Baba 108. Goodness gracious. UNH rejecting the 200. Costco rejecting the 200. Visa getting crushed. Intel getting crushed. MU looks terrible. ExxonMobil looks horrible. General Electric below the 200. Boeing below the 200. Chevron below the 200. McDonald's looks kind of rough. Consumer Defensives got absolutely whacked on Friday. Johnson & Johnson not looking too hot. Pinduo Duo looks pretty terrible. Sub 100. Good lord. ASML fresh low. Uber below the 200. My fiance owns Uber in her 401k, but for much lower, so I kind of told her we're staying. She might kill me later, but we're staying. Procter and Gamble below the 200. AMT Utilities name getting creamed on Friday. MCK creamed on Friday. Spotify looks like it's breaking structure. T-Mobile double top. Boy, Lynn breaking the 200, kind of nasty. There are so many nasty friggin' bars everywhere on Friday. My goodness. I've seen these already over the weekend, but looking at them again with fresh eyes. What looks good's the VIX. No, I'm kidding. Um, yeah, this might be a pretty good short too. Intuit looks terrible. Coca-Cola got hit. Consumer defensive name. T-Mobile, Verizon looks very similar. Philip Morris looked good for one day and then just reversed, 6, 7 days of action, but resting right on the 50. You know, I wouldn't touch it. A slow cigarette company, that's not what you want to own. Schwab broke the 200. Slumberger looks terrible. AT&T looks like T-Mobile, and TJX over 129 would be interesting on that one. Melly. Melly is one of those that if you look at the weekly, it still doesn't look too bad. And this is also a beast of a company too. We'll see. I don't really see an entry on it, so I can't take it, but would I go long on Tesla? It's not extended from the 50 SMA. Yeah, but it's below the 50 SMA, and it's below the 200 SMA. Could you play it for a bounce into those? Yeah, maybe. But here's the thing. If I'm going to play a bounce on an overall market sell-off, I don't want to cherry pick a particular stock because, right, you can get Apple and Google and Microsoft and Amazon all bouncing, and it's making the QQQ go up. And then Tesla can have some bad news, and while the market rallies for 2, 3, 4 days, you could pick a stock potentially that isn't rallying at all, on some bad news potentially, on some Elon Musk scandal, or on some terrible delivery numbers, or some whatever it might be. Now all the bad news might be priced in, right? But this goes for any stock out there, right? Like, even I don't want to play Soxel because that's the semiconductor ETF. Now, it's likely that if the semiconductors rally, and Apple and Microsoft, right, the semiconductors will as well, but I don't even want to pick a group like that, right, within the QQQ. I would rather broaden out, what I'm playing and say, I think the QQQs are oversold on the short term. I think maybe a 1, 2, 3 day strong rally is in the cards. And if it's in the cards, why am I going to then try semiconductors as a long when I can do the TQQQ, which is your triple leveraged Qs, and, play it that way, right? I think that to me sounds a little, and I'm not pigeonholing myself to, semiconductors, and I'm not pigeonholing myself to one individual stock where bad news can come out, and then the market rallies, but the stock that I pick, of course, isn't going anywhere. No, if the Qs are going to rally, the TQQQ's obviously going to go with it, and it's not semiconductors, it's just the leveraged NASDAQ. I think to me that sounds a little bit more on the way to go, and if then that means that the market is going to shaping up, right, then I can start to look for individual stocks which are like outperforming, etc., for potential longs down the road on individual names. But when everything is getting beaten up like this, everything looks bad. So, and if you think things are oversold, I want to focus more on the broadness of the market versus trying to cherry pick one name, because if I pick one name, with my luck, it's probably going to be the one name that doesn't rally. So, I don't want to do that. Excuse me. Oh my goodness, RTX, what did they do to you? Oh, this thing was just at highs and now it's below the 200, just like that. Boom. Now, this thing's been in an uptrend, but goodness gracious, man. Totally taking names to the woodshed. EQT right at the 200. Mondelez chocolates. JD. CB. Yeah, GDXU for gold. Yeah, I think GDXU is not a terrible idea. If the gold miners are going to hang in there, if gold's going to hang in there and find support at the rising 50 day, it's the only real sector that I'm seeing that is being supported on a rising moving average. Everything else is getting killed. So you're effectively trying to catch a knife. I don't want to try and catch a knife on any one individual sector. If I'm going to try my knife catching skills, it's going to be on the broadness of the market, which is the Nasdaq, which if it's going to lead on the way up or if it's going to have the bigger move in my opinion over, the S&P 500. They're a bit faster moving names. So in that scenario, I would play the TQQQ. But again, that's just for a small trade. But if I'm looking, what has the potential to still be a swing trade, in my opinion, it's gold. But we'll see. We'll see. I'm not trying to get overly aggressive in this market or own any individual names, right? I'm short stocks. I only have shorts, and this is a great time to track relative strength. If any of you guys have watched my interviews, what things are holding up best when the market's going down, right? That's your future leadership. I thought, a few weeks ago it was potentially energy names, and I was proven wrong quickly. And then I said, under $65 a barrel for crude oil, and the conversation's going to switch to, are we in a recession? And sure enough, the betting markets have us at like a 65% recession chances this year. By the way, I don't want to be contrarian, but, if everybody thinks we're going to get a recession, who knows if we really do get one. But again, the reality here is, crude oil outside of the 70s, crude oil prices tend to predict if the economy's going into a recession or not. The only time a recession's ever been caused by crude oil was in the 70s, but every other time that we had a recession, you had a drop in crude prices. So when you see crude dropping like this, it's good to pay attention because there's only been one other time in history where crude was the cause of a recession. It never really happened before, other than the 70s, which was stagflationary period. And we are kind of in a period like that right now too, but again, I'm not sure. Right, in the 70s, it was crude oil prices going up way too high that caused a recession. So this is definitely different than that. All other instances where crude oil, really takes a beating, it kind of speaks to the demand of crude oil and, a potential recession. But again, I don't really care about any of that personally. I trade price action of stocks, and I look for leading groups, and I look for tight setups, and I look to manage risk. And what I do is totally different. I don't really start applying my macro cap or my macro cap until I focus on my setups and I take an entry, and then I give myself all the reasons why if I'm short, why should I continue to be short, right? Because my charts are working, because the market's weak, and then I could say, the tariffs and the this and that. But the reality is I don't give a shit, right? None of it matters. What matters is your entries. What matters is your risk when you get into a trade. People I think tend to focus on the wrong things when they get into a trade. They'd rather be right instead of focusing on price. No disrespect to Tom Lee, but he's been calling to buy this dip for the last month and a half. Had anybody listened to him, they've been absolutely slaughtered. So, I even kind of joked, that if I had listened to him, I'd have a $98 average on Palantir, right? So it's like you don't want to buy the dip on prior leaders when the market's going down. I mean, I've never heard of that before. It's the craziest thing you can do. It's literally the craziest thing you can do. This Redfin's holding up pretty well, huh? Big old base. Redfin. Isn't there another one? Like RKT that was holding up pretty well. Yeah, wow. RKT. This thing's like, oh, the market's going down? I mean, look at the volume that's coming on this thing recently. It's not my Aunt Susie, I'll tell you that. See what this thing looks like in a few more days. Home builders look rough. You got Pulte Homes is below the 200, looks pretty terrible. You've got Len, you've got Toll, you've got Builders First Source, you got Green Brick. Yeah, this looks absolutely terrible. I don't want to be the first in the pool. Do I think prior leaders will reach back to their highs again, like their all-time highs? Do I think Palantir's going back to 122, 125? If it does, not anytime soon. Not for another year or more, probably. I mean, it'd have to double from here, and the environment sucks. I'm not saying it can't double, in a few months, but you don't just like recover in a straight line from here. So like, even if it were to start and this were the bottom, and the market were to like, and Palantir were to start to V-shape recover, it would take like 3 months of price action just to like V-shape recover it back to highs without like damn near any downticks. But if it goes up and then goes sideways, then goes up and then goes sideways and then goes up, I mean that's like 6, 7, 8, 9 months away, or longer. So. How have I overcome not smoking pot anymore? Just by not smoking. Just put it down. The same way I resisted not buying dips in prior leaders. You just don't do it. If you don't stop smoking, it's because you don't want to stop smoking. That's what it comes down to. What about recession type names? AZO and O'Reilly? Yeah. I mean, this thing's been in a pretty steady uptrend. Got smoked on Friday along with all consumer defensive names. Let me see. AZO is obviously consumer cyclical, and ORLY, I'm assuming, is the exact same thing, and they look exactly the same. Yeah, I mean they look fine. Here's the thing with O'Reilly and Advanced Auto Parts, they're a little slow. They're a little slow. That's it. That's what I gotta tell you. They're not fast movers. I mean, slow money's better than no money, but on the flip side, I'd rather be short and catch a 30-40% drop in a GRRR. And that's it, right? And trade that. So, if people are unsure about shorting, you know what you have to do, right? Flip your chart upside down. That's all you gotta do. Flip your chart upside down and then it'll look bullish. Or get really good at doing handstands when you're looking at your screens. I mean, whichever you choose. Poor Ethereum. I mean, Ethereum is back at the lows of 23. Oh my god. What an absolute terrible, terrible thing to own. Waste of life owning Ethereum. Man, copper got killed. Silver got killed. Nat gas is still hanging in there, though. The Russell. Oh boy. This thing looks horrendous. Almost back to the lows of 23 as well. Lost more than a year of price action in like the last 40 days. Decent little action in silver. Yeah, I saw copper, but it got killed, right? I mean, you look at copper futures. It was a double top. I mean, does it get any cleaner against $5.20? So just killed, just killed. But yeah, silver too. Silver with a nice little rebound. But really, the granddaddy of them all is gold, and that's why you don't hear me saying I'm interested in what silver and what copper are doing. More interested in what gold's gonna do. Don't really love to be in things that are lagging. I'd rather be in things that are leading. And for me, it's been gold, right? Just from the eyeball test. If this market were to go a little bit lower, that would be so awesome. Come up against the ascending 200 of the weekly, call it 470s or something. Like that would be like just some more violent selling into the declining 200, into the ascending 200 on the weekly. And with how fast that would be, it would take so long to repair that weekly chart. So long. I mean, you could basically kiss 2025 goodbye in terms of like being a swing trader, which I don't know that that's necessarily true, but what will come on the other side of this correction is going to be absolutely marvelous. Like it's going to be awesome. I mean, but this is like the nastiest weekly candle like you could find on this chart for like the longest time. Like if you go back like 10 years, you can't really find an uglier weekly chart. Maybe COVID, but even COVIDs weren't even that bad. I'm like, this is just like, damn, what the hell just happened here? What the hell just happened here? This is international money leaving. This is money managers closing stocks. This is institutions getting the hell out. This is like even retail. That's funny because all the news is that like from JP Morgan's desk is that retail traders just bought like on Thursday like $4.7 billion worth of stocks, which was like the most, in however long. And then on Friday they puked up 1.5 billion of that. And so it's like you got retail traders out here still buying the dip on Thursday. Like they were getting, long 540s. I mean, you guys wonder why retail traders always are losing. It's because they're doing the dumbest crap ever. You just do not need to catch a knife. I mean, nobody needs to do it. And if you're gonna do it, make sure you do it with a tight stop. A really tight stop. Yeah, but if this thing goes to like 580, that would be, or 480, that would be even more spectacular. 480, 470s. Oh man. I mean, again, that's asking for lower, and I'm not necessarily prepared for that mentally. Like, in such a quick time, and considering this volume on Friday, I'm thinking hopefully a capitulation bounce just for a trade. But otherwise, yeah, Buffett's killing it. Buffett's a genius. Buffett was being called an idiot for having $300 billion worth of cash and holding treasuries and selling half of his Apple and not buying any of the AI stocks and blah blah blah, and the old man doesn't know what he's doing. He's washed up. Yeah, how's that looking? Warren doesn't know what he's doing, huh? He's gonna stick around just another 5 years just to laugh in all of our faces for shit talking. Yeah, Buffett's one last dance is tap dancing on us, laughing, laughing at half of the retail for buying the dip, laughing at institutions for calling him an idiot. When he sold half of his Apple, that should have been a fucking tall tale sign that, like, Warren's out here telling us, hey, this shit's overvalued out here. And everybody's like, Palantir's gonna be the next $1 trillion company. On $3 billion in yearly sales, they're going to be the next $1 trillion company. Yeah, Mike, there could be. There definitely could be more downside. Um, but again, I have no idea, right? I am short some stocks, and I plan on covering more of them today, potentially even closing them. We'll see. But I am prepared for a bounce on the TQQQ. So I've kind of got that queued up, and we'll be eyeballing that all day. So we'll see. We'll see. Could we go lower? I mean, the lower we go, the better of a bounce opportunity it will be. But again, it won't create a great swing trading market. So I'm gonna just kind of let the first few minutes of the market settle. But guys, thank you so much for joining me on live today. I see that there's 2,500 people. Yeah, I appreciate you guys a ton for joining. In the mornings, I will be doing these at 7:30 until all pre-market, and just to help kind of get us prepared, get our morning thoughts in order. And yeah, thank you guys for joining, and I will be seeing you guys tomorrow. So appreciate you guys. Thank you, and enjoy the rest of your day. Trade them safely out there, all right?